Hello everyone. Financial markets are shifting back into risk-off mode amid renewed US-Iran hostilities. Stocks are pulling back from record highs, Bitcoin hits a 4-month low, and the yen hovers near intervention territory. This is your midweek technical outlook here at xm.com. Now let's get started. Now let's start with the US500 index, which is currently snapping a 9-session winning streak, pulling back from the record high near the 7,620 level. The pullback occurred in the previous session, but it is now currently attempting to stabilize just above the 7,500 level, with the next key support coming at the 20-day SMA just below near the 7,480 level. Now, should price action drop beneath this 20-day SMA, then the next key support to watch is the 7,350 level, which has been holding losses since early May. And then further below this level, the next key support is a 50-day SMA near the 7,165 level. Now, should this rebound hold, then the next resistance is the record high near the 7,620 level before price action moves into uncharted territory. Now, the momentum signals are reflecting this pause in the strong bullish bias. The RSI and the MACD are both holding in positive territories. However, they're flatlining, suggesting that this consolidation beneath the record high could continue for now. Now, let's also have a look at dollar-yen, which is hovering near this 1-month highs, trading at little distance from this 160 level, which is seen as a trigger for intervention. Now, should this pullback resume, then the next key support might come from the 159 psychological mark, followed by this converging SMAs, the 20 and 50-day SMAs near the 158.75 level, and then the 157.90, which is another key support level to watch. Now, the price action is trading well above the long-term ascending trend line. The bullish bias holds is also reflected by the momentum signals, though this strong resistance might continue to cap gains. However, should it manage to overcome it, then the next level to watch is the 160.70 level, which is a multi-year high and was last touched on April 30th, and it triggered this sharp pullback, from which now the pair has over 80% recovered. So the momentum for now is also suggesting, the MACD and the RSI are suggesting that more of a consolidation below this zone than an immediate reversal. Now let's also have a look at Bitcoin, which sunk to its lowest level since the outset of the Iran conflict. It dropped to a 4-month low near the 61,300 level, tracking the February 6th low. Now, it also extended this 5-day pullback, quite a sharp pullback of 16% just in 5 sessions. But it is currently attempting to find a floor near this level, seeking moving with price action moving back toward the 65,000 level. Should it resume to the upside, then immediate resistance might come from the 70,000 psychological mark, followed by the 72,500 level, and a break above this area would then mean that the price action could re-enter this ascending trend channel intact since early February, and then the near-term upside could then resume, especially if it manages to overcome this 20-day SMA near the 75,000 threshold, which is also another key level to watch. Now, to the downside, should this pullback continue, then the next key support level to watch is the 60,000 psychological mark, which is also a 15-month low, tracking October 2024 lows. And further, a breach of this level would likely dampen further sentiment and increase selling pressure, tracking more lows from the 2024 near the 58,700 area. Now, the momentum signals are reflecting the broader a bearish bias for Bitcoin. The RSI is in the oversold region, and the MACD is also overextending in negative territory, reflecting this persistent pressure on the largest cryptocurrency. Now, that's all for today's market wrap. Thank you for watching.